Hello, everybody, and welcome to the Trading with Ashley show. All eyes are on Nvda. Now, a lot of weight is being put on Nvidia's shoulders, and it has continued to outperform, and the prospects look very good. But, with earnings, you can never tell. You don't know if a stock is going to get great news and still go down because everyone starts taking profit, getting a little bit scared with what's going on in the macroeconomic dynamics with the market right now. So you never can tell. But the one thing that is almost a sure thing is volatility will be higher. It's already higher. You can see it today. Now, if you're an option seller, you can capitalize on that. But most of you know from being with me for quite some time, I don't like to take too risky of a trade if I'm going over earnings. It can really hurt you if you choose the wrong direction. But I don't mind using earnings for a fair entry on a quality stock. So what we're going to do today, I'm going to take a look at Nvidia. We're going to look at the fundamentals. We're going to look at the technicals. We are going to define what would be considered a fair entry at this point, and then I am going to share with you a potential trade that you can consider that may do well for you, whether Nvidia goes up or down after earnings. And so to do this trade, you're going to have enough for a cash secured put, or if you're using margin, it'll take a little bit less. I'm also going to identify a credit spread for those with smaller accounts, but please be aware that with credit spreads, there's a little you can do with it if you don't have enough money to break the spread apart and roll down and out the sold put. So I tell you that with caution because I want you all to be safe. It's great to make money, but there's no guarantee that this is going to work out in your favor. And so I want you to take extreme caution and maybe either just paper trade it or definitely don't do more than your account can handle. Okay, let's jump into the computer and I'm going to show you what I found on Nvidia. For starters, I want to look at the fundamentals on Nvidia because it's very important you fully understand stocks that you are going to put real money behind. So let's look at the analysis tab. Now, this is a sight to behold. This is showing you how over time Nvidia continues to bring in revenue and they can bring that money to the bottom line. You see here these blue bars, this is the revenue that's being brought in. The yellow bars, that's the money they're keeping. It is really challenging to find a large company that can do this consistently, and Nvidia has. So that's why I do not mind taking a little bit of risk with Nvidia, and I want to look at some entries that either you get the stock at a fair price or you get the premium for trying over earnings. And so we're going to go look at some potential entries, but I want you to fully understand stocks before you actually try to get into them. Now, as you can see from past earnings, Nvidia always surprises to the upside, but there is a lot built into this particular earnings. So we don't know what's going to happen, but right now the expectation is that they will continue to outperform. So we'll have to see. I'm going to look at some potential plays for you to consider getting in. Now we're going to look at the technicals so that you can have a better sense for a fair entry. I really like that we are trading at the bottom of the Bollinger Band going into earnings. To me, that usually does a better job because it doesn't require quite as much good news on earnings to push the stock higher. If we're trading right here at the top, well, they need to knock it out of the park with both earnings and forward guidance. So this gives us a little bit more of an opportunity to see a run after earnings. And we should respect the fact that we are sitting right here on the 100-day moving average. But there is a little bit of caution. We are currently trading right here below the 50-day moving average. Your 50-day moving average is right here at this 186 area, and currently at the time of recording, we're trading slightly under it. Keep that in mind because that does matter if we end up having a deeper pullback. It will be harder if we have a deeper pullback to get above the 50-day moving average. It's a very important technical indicator. But if you look at all this and then you see right here where this red line is, this is the 200-day moving average. Now, history has shown that anytime you take a quality company like Nvidia and you purchase the shares under the 200-day moving average, you are usually doing very well when you look at your portfolio a year later. So keeping that in mind, I'm going to have the trade that I'm going to share with you look at this 50-day moving average for a potential entry. Let's go take a look at what we're seeing on the option chain. For this trade, since I'm going over earnings, I'm going to go out further. I like doing this because it gives me time, if a stock pulls back, for it to then bounce after earnings. Plus, IV Crush is part of the equation after earnings, and that helps a lot. So this trade's going out of over 90 days. It's 94 days at this point, and we're going to go out to February 20th of 2026. Now, remember, 151 was that 200-day moving average. So I'm going to go right here at 150. Now, I will be paid quite a bit to take this trade. I'll have to put up $15,000 for after the trade. And if you're using margin, it requires quite a bit less, but I am going to be paid $4.70 a share, so $470. And look, you can see right here, the open interest is the highest on this particular strike, and that makes sense because I think a lot of traders are looking at the 200-day moving average as a potential entry. So if you take this trade, one of two things will happen. If after earnings, Nvidia surges ahead, then you will be getting further away from your strike. That means something that you were paid $4.70 for, you'll be able to get out of this by buying it back much cheaper. Now, if the opposite happens, if Nvidia heads down towards the 150, well, your trade doesn't expire for over 90 days, so there's less of a chance of early assignment. But if that happens and we get to your expiration date in February and you're trading at 150 or lower, you will assume assignment of these shares. Now, once you get a little bit closer to your expiration date, if you're still trading close to 150, you can decide at that point to actually roll the trade. But at this point in time, it looks like 150 would be a very fair entry for Nvidia. So either you get your hands on your money quicker if it shoots up after earnings, or you potentially will be put the shares as you get closer to this expiration date. For those accounts that want to do credit spreads, it's really risky when so much is riding on one particular stock. But if you're going to do that, I would go extremely low and further out. I'm looking at April, which is 150 days away, to create a potential credit spread. Now on this, I want to start right here at 130, and let's look at our deltas. Right currently, before earnings, the delta is about 0.11. So if you want to take an opening trade, you could sell the 130, and then if you wanted it to be $10 wide, which would be $1,000 to put on this trade, you could buy the 120. If you're going to do this trade at this point in time, you would receive about $1.15 credit per share. So it's about $115 for putting up $1,000. Now, trade maintenance would be if you put this trade on, you can consider getting out of this trade if you're at a 50% win, meaning something that you were paid $115 for ends up whittling down to about 57 cents. That would be 50% profit. And that's usually advisable because that way you can use the money that's being held for the trade and put it on other trades where you can actually make more of a return. Now, if this 115 turns to $2.30, meaning you would have to give back the $1.15 you received, plus dig into your pocket for another $1.15, then that's considered a 100% loss. A lot of times that's a good time to go ahead and exit a trade. It's a losing trade, but at least the exposure is not to the full $1,000 for the width of your spread. The big event is tomorrow after the market. So tomorrow might rise in anticipation of that, or again, it could sell off as people are trying to take profit, a little bit worried about what will happen after Nvidia earnings. But remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you want to watch another video that I put together that will really help you navigate these red markets, you can watch that right here.